me get everybody on board. Have people so far. So, déjame empezar hablando en español y primero que nada disculparme por la sesión de la semana pasada. Lamentablemente tuve un tema médico y yo pensé que él me iba a dejar salir de la clínica más rápido de lo que pensaba. Hicieron quedarme más rato y forzó a que cancele la sesión, inevitablemente. Precisamente Renato me había escrito con relación a la recuperación de clases. Quiero esperar que haya un poco más de alumnos para setear algunas sesiones que podamos tener. Hay 3 sesiones que están pendientes, en realidad. Los que han llevado conmigo antes un curso saben que si me ha pasado esto alguna vez, que he perdido clase por enfermedad, manejo bastante bien el tema de hoy tener múltiples sesiones y si es necesario repetir las clases un par de veces. Así que aquellos que ya se van sumando, vayamos pensando en sus horarios, su disponibilidad, porque es difícil manejar el tema. Pero eso ya no va a tener las clases el sábado o incluso el domingo, si que ustedes están dispuestos, dadas las restricciones también de salir que tenemos en este momento con motivo de la cuarentena, ¿no? Lo cual lógicamente afecta nuestro desarrollo. Lo que voy a tratar de hacer es que las siguientes clases sean un poco más intensivas y más participativas en relación a lo que me han estado comentando algunos alumnos y incorporar mucho más información actualizada o más ejemplos reales que debemos tener, como el que vamos a hacer ahora con relación a Ferry Corp, que ya cargué al directorio de Blackboard. Adicionalmente, y en algún momento lo voy a cargar acá a nuestro sistema de sondeo, y nuevamente quiero que haya más gente, probablemente lo hagamos a las 8:30, un mini break. Ha habido la consulta si las clases pueden ser en español en lugar de inglés. Yo voy a dejar eso al ámbito de la clase. A mí me es indiferente dictar en los 2 idiomas. Yo prefiero dictar en inglés porque hay cierta facilidad que van a tener ustedes al analizar estado financiero en inglés o estar en una multinacional en la cual vayan a hablar inglés. Lógicamente, si iría a trabajar fuera y demás, o interactuar con personas de habla inglesa nativa, van a tener un mejor acento que el mío, pero la idea central que quiero transmitir es que la información que van capturando en inglés les puede ayudar en general. Nuevamente, el problema que tenemos a la hora de hacer estas clases virtuales es que es muy difícil leer, no es posible leer los rostros, no es posible seguir si me están entendiendo, pero si está habiendo algún problema de comunicación, ya sea por la dificultad de los términos que uso o por el idioma mismo, en el sentido que yo no me expreso lo suficientemente bien o no soy lo suficientemente claro, por favor, déjenmelo saber, con todo gusto. Déjenme ver si puedo prender si quiere el video, pero no está, no, se está lenteando la señal. Con todo gusto absuelvo las dudas que tengan y me quedo después de clase para seguir conversando al respecto. Sin más, les he cargado algunos documentos en Blackboard, salvo que alguien tenga algún comentario adicional. Como he dicho, a las 8:30 un break para hacer las consultas más alumnos, hacer las consultas sobre la recuperación de clase en algunos horarios alternativos. ¿Alguna consulta adicional? ¿Alguien tiene alguna pregunta? ¿Algún comentario? Don't be shy. Ok. So, permítame. Por favor, voy a cerrar varias de estas pestañas que a veces me confunden. Sí, tengo una persona que está pidiendo hablar. Rodrigo, adelante.
Profe, ¿qué tal? Tenía una pregunta, no sé si ya tienes cuáles son los lineamientos para el trabajo grupal para ir avanzándolo.
Sí, me ha faltado cargarlo. Ya, listo, gracias, doctor. Déjame apuntarlo ahorita y lo cargo al sistema para que lo puedan avanzar.
Vale.
Como digo, es una visualización sencilla de algunas empresas, recogiendo la información que vamos, o las metodologías que hemos estado utilizando. Lógicamente no espero Ahorita vamos a ver un tema de depreciación, ya la complejidad. Lo que voy a explicar, lógicamente, por qué la metodología top-down puede ser una buen proxy en un ejercicio rápido que tengan que hacer en la vida real, en sus trabajos, pero resulta siendo mejor una metodología bottom-up analizando cada uno de los elementos de los activos fijos. Pero sí, lo cargo a la brevedad para que podamos seguir avanzando con eso, con las fechas y demás, y podamos trabajar mejor. ¿Alguna otra consulta? Esto. Esta es nuestra pantalla de Blackboard Learn, ¿sí? Ya que he colocado lo que es PP&E y depreciación. Oh, sorry, let me switch to English, sorry about that. So we have here all the information regarding property procurement and depreciation, right? Procurement of fixed assets. There is a technical note related to long-lived assets. Switch this here. Oh, sorry, I'm just gonna close it. Okay, so I have uploaded a Harvard Business School technical note about long-lived assets, and it's nothing new for you, right? If you have taken accounting, it should be very straightforward related to what's going to be the depreciation of an asset, right? And what's going to be anything related to the cost basis, depletion, right? And anything related to maintenance, and what's going to be the sale of the assets, right? How you're going to incorporate that as part of our estimation in general. So there shouldn't be much issues here. The only maybe issue that I hope you have been exposed in accounting, right, is that there are a couple of different depreciation methods, right? You have a straight line depreciation, but you also have accelerated depreciation as part of the deal. And the typical one is a double declining balance depreciation structure. You probably have seen that, if I recall my days in studying economics, right, and accounting classes, right? At that time, these are the most typical ones, and the sum of your digits depreciation as part of the calculation that you should take as part of that. Why is this interesting? Why do we care about depreciation? What do we care about? What is the depreciation method, right? Because of the depreciation tax sheet, right? From a finance standpoint, from a generation of cash flow standpoint, right? The depreciation does generate a tax shield for us. So if we do have an accelerated depreciation, it is obvious that we are going to be better off not paying taxes, right, on those first years, because our fixed assets are depreciated faster, right? And in that sense, since we are not paying taxes, or we are paying less taxes than we should, right, what's going to happen given the time value of money, the value of our company, it's greater than it should be if we have this accelerated depreciation method, right? That's why usually tax authorities do not accept this methodology, right, the accelerated depreciation methodology, except in some special cases, right, as part of that structure. Okay, so this can actually, you can review very quickly. There are a couple of issues regarding it. We are going to go, let me just jump into my, close it, sorry, 1 minute, into my Excel. By the way, the Excel is already on Blackboard too. It's already here where it is. I have also, as I was saying, have uploaded this file. We have this file, which is the financial statements, the 10K for Pericorp, right? And we're going to quickly go over that during the course of this session. I have also loaded a PDF regarding the NIF 6, right? 16, sorry, NIF 16. The normas internacionales de información financiera 16 that have replaced the normas internacionales de contabilidad, and they have been replaced by this one, and we're going to touch base on that because it's something that is actually present here, right? And I have uploaded the Excel spreadsheet, right? Let me drag this Excel spreadsheet over here so we can quickly cover that. So regarding fixed assets, right, and what we should care about that, or what was the critical issues of that. So most fixed assets are going to be affected by depreciation. We're going to be recognize that they have a useful life, and we're going to be depreciating those assets or reducing the value of those assets along that useful life, right? The typical ones are buildings, plant, and equipment. But then when you look at the long-term assets or non-current assets right on your balance sheet and next to fixed assets, or usually and sometimes mixed with them, right, there are some other assets, right, that accountants do consider them as long-lived assets, which are natural resources, right? And here all the mineral resources that a mining company may register in their balance, right? Those are not possible resources, but resources that have already been quantified, right? Remember, when you are working in a mining environment or in a mining sector, right, possible resources, given the engineering studies and the exploitation review, examination that have been performed, you believe that they are resources, quantify them as possible. But then if you perform further studies, right, you can estimate them correctly and come out with a probable resources, right? So that's what you may have considered that in the balance sheet as natural resources. In other situations where you will see natural resources as part of the balance sheet, when you are looking at an agriculture company. Agriculture company may put or should put, better said, as part of their PP&E, as part of their non-current assets, a line that states how much they have invested, how much is the cost of the product that they have in the fields, right? All the goods that they have in the fields, all the cotton, all the corn, the sugar, whatever, right? And you should treat them not as we treat a typical PP&E with depreciation, but it should be imagined as some sort that can be depleted over time, right? Similar to an inventory, that's the way you should be treating them as a whole. And last but not least, there are a certain number of fixed assets, right, that they're not going to be depreciated or depleted, right? Typically, it's going to be land. Right? That's not usually, does not never that depreciated or depleted as part of that. So having said that, right, what I would like to go with you very quickly is first our typical analysis that we normally prefer top-down approach made. What I have done here, by the way, the information, financial information of firm and subsidiaries, right? Actually, it's record of subsidiaries, consolidated financial statements, and these are the revenues and these are the cash numbers, right? Let me increase the font, the zoom a little bit so you can better present them. So these numbers, right, that you can see for 2018 and 2019, those are the historical numbers, right, for CapEx as a whole. And if you want to look for them, let me just switch back here. And this is the audited statements, right? Let me switch back and rotate it left. See? And if we want to look for that, right, in the financial statement where you would like to go when you are looking for the capex, right? First place is obviously the statement of cash flow. And the statement of cash flow, as you know, it can be presented in a direct method or indirect method for the cash flow from operation. In this case, is a direct method. And in the case of the cash flow from investment activities, right? We're going to see that the PP&E line that I have been mentioning here has appeared here as adquisición de inmuebles, maquinaria y equipo, and the two numbers that I mentioned are already present here, right? By the way, this analysis, this Excel spreadsheet, right, is focusing on the PP&E side with the depreciation analysis. I have not included the intangible, but the analysis will be the same, right? We will perform the same analysis, and maybe we can actually base on that in a bit, right? I prefer to focus on the depreciation given the size that they have as part of our analysis. Okay, but that's the first place in the financial statement, right? But obviously, there's another place you will look for that, and there's one note, right? As you know, there's a note on PP&E. Scrolling down, it's note number 10 over here. I can jump to it faster than I can do. Here it is, and I have to rotate that to the right, so we can see that in its full analysis, right? And we're going to touch base on this in a bit even farther, right? The good thing about this node is that it disaggregate, right, the different types of PP&E that you will have, right? You have buildings, right? You have machinery and so on. And obviously there's a line over here which is additions, right? And that line, and let me increase the size over here, right? This line that it's additions over here, that's basically your cap, right? As you can realize, and I'm scrolling. This is a number that we had on top, 186,132, right? So that's 136,132,000, right? As part PP&E capex, right? That this company had in 2019. And that's the number that we are using right over here as part of our estimation, right? What I do first is we're going to try to do it top down. And this is the typical approach most people like to do because it's very simple, it's very direct, right? But as you can realize, it can get a lot of bias in your estimation, right, as a whole. What I have calculated here is the revenues, and I have made a top-down assumption. Yes, granted, I have used a top-down assumption. Logically, as we have discussed in prior sessions, we should try to do this analysis based on an estimation from a bottom-up approach, right? In the prices, calculating the quantities in order to come out with a better number here. I have used a top-down approach because this is where the part of the analysis I don't want to focus. And I have assumed 5% as part of the typical estimation, a little higher than we have in the macroeconomic community annual for us, for mining, right? In the long term. If we go with capex, right, the typical way people try to estimate capex, right, and then the depreciation, it's based on the revenue now, right? Because you want to relate how much you're spending in fixed assets to how the company is performing. So the typical way it's performed, this analysis, this capex over revenue, is calculating that as a percentage of assets, and I have used the average of the last 2 years, right? I actually consider other prior years, such as 2017, 2016, and so on, right, to cap a roughly estimation. Based on analysis that I performed further, this is a rough, good approach to come up with a very good percentage. So based on that, and assuming a 2.7% of revenues, right, I have estimated what will be, or forecasted what will be the capex in the next 10 years for Pericol. Why do I want the capex? Because I need to come up with the PP&E gross, right, calculated in the years, right? And in order to do that, right, we need the historical data, that's our base for 2019, and add the capex that we're going to be as a whole, part of that estimation, right? So what normally people do, right, it's okay, they assume, okay, this is the depreciation that we have, this is depreciation of revenue, this is depreciation over PP&E that we're going to be having, and we're going to come out with some ratios for this estimation of depreciation, right? From a top-down approach, you can go with depreciation over revenue, depreciation over PP&E, right? Obviously over gross PP&E, in order to come up with how much you should be spending on depreciation as a whole. Although depreciation of revenue sounds reasonable, right? The problem is that these are fixed costs, right? That once you have already once you have already used the cash flow on capex, right, and incorporated in the fixed assets, right, the depreciation is going to be a fixed cost. And let's assume a straight line depreciation is going to be a straight line over the useful life of the asset, right? The problem with linking with revenues as a whole, right, is that depreciation may not behave identical as the revenue. even if you have a revenue decline, right, depreciation will continue to from accounting that is going to be affecting your net income as a whole. By the way, we are getting the depreciation number. Once again, let me get back into the report that we have over here. Just 1 second. Okay, that's better. And I'm going to rotate it once again to the left, right, to have it clear. The depreciation number, obviously, is coming from the financial statement, from the income statement. I increase it too much. Okay, there we go. This is from a consolidated portion, and this added information. So the income statement, right, is going to have the depreciation. And logically, you will argue, okay, it's going to be separated, right, into the cost of goods sold, and some other portion is going to be on administrative expenses, right? That's where depreciation should be hitting our income statement, our EBIT line, utilidad operativa. So we should look into notes 18 and notes 19 in order to come up with the depreciation, right? There's an easier way to figure it out. If this financial statement of cash flow was prepared from the indirect method, right? So they're using the direct method, but if we have the indirect method, the depreciation line will appear here, and you will be able to pick it up there immediately. So let's scroll down to note 18 and note 19 in order to come up with the number to just show you that where we have it. It's obviously that we are going to be observing here as part of the cost of goods sold, right? We're going to have the revenues, right? That's part of the number that already. And there's a line over here, right, related to depreciation. And it actually mentions note 10G and J, right? And we'll look into it in a bit. And remember, note 10 is related to the fixed asset. Once again, I'm focusing on depreciation right now for this analysis, right? Similar things should be done for amortization of intangibles, right? And we're not doing right now. Okay. And the other thing that I was mentioning is that there's going to be a depreciation line, or there's also a depreciation line on the sales expenses, right? And depreciation that appears over here should be related to the places where they sell the offices, the commercial offices where they sell all the machinery, right, to the different customers, the mining companies as a whole, as part of this estimation. And last but not least, PP&E for net emissions. So let me 1 second. There's a question here. I didn't read it fully. And you also find depreciation by subtracting PP&E net of addition between 2020 and 2020. No, and we're going to look into that in a bit. So the problem with this, just using PP&E net, right? The problem with that, first of all, using net of addition. Sorry, I didn't read that part. So PP&E net of addition. The problem with that is the only thing will be any assets you have sold, right? Or any asset that you have written off. Any assets that you have not longer useful and you have set aside, right? Canceling completely the assets and the accumulated depreciation. That's the only issue that will affect the number you are mentioning, right? But honestly, using PP&E net of addition will probably give you to a wrong number because there are several things that we're going to look into right in a bit, right, in notes 10G and 10J that are going to be affecting that. And actually finding out depreciation is not difficult, honestly. From a calculation standpoint, right, it can be easily figured out in each one of these notes. And as we're going to see in a bit in note 10J, there's the depreciation number straightforward. So we go down, right, a little bit. There's also depreciation in administrative expenses, right? And that's related to the administrative offices, right, that you're going to have, and all the equipment that you have in the administrative offices, such as photocopiers, right, computers, and so on, everything related. But I wanted to touch base on notes 10G and 10J, right, and that's where we're going to scroll. right? Once again, I think I scrolled too far. That's 4. We're not 4. You should remember the LCM here is 45. So we are just rotate it again, right? So everybody can see it. We are talking about this structure, right? The typical structure that you will have with the different lines. So let's forget for a minute about the different lines and let's focus on the total, right? For a second. What your class was saying is, okay, can we go with PP&E gross, this line, the 2.254673, subtract the number that we have in accumulated depreciation, right? So that's going to be the 616679, right? But eliminate the additions. So let's eliminate, let's not consider this line of additions that we have here, right? This line that is the 186132, and try to come up with the calculations that you are going to be having for what will be the depreciation. The problem with that obviously is the possibility, right, that some of the PP&E that you have been sold or have been written off, right? You have already said that you're not going to be using those as a whole, right? So that's the first problem is this line, right? All the thing that has been retired has been sold as part of that estimation, right? There's also going to be some other issues, right, related to accounting, and that's the problem. Let me increase the zoom a little bit, right? And that's the problem that may affect your calculations, I was saying, because there's this weird thing about revaluation, right? So when you are doing analysis of the fixed assets, what accountants should do, right, should try to figure out, okay, first of all, if this is a historical call or more market-based, right? And in some situations, they should consider an impairment, adjusting it to the market value. There are some particular considerations where they could consider a revaluation of the asset, right? They could increase the value of the asset, right? Particularly that occurs when a company is acquired by another, right? In that instance, and there are some accounting effects here that may bias your total estimation of using PP&E. That's what I was saying. Here's a reversion of revaluation, which can affect what you are calculating, right? Or there's this, in this case, is an effect for conversion, right, related to the exchange rate, right? That's going to be affecting the calculation that you're going to be having here. You don't want that to mess up your estimation as a whole. That's the difficulty you're going to be having. So having said that, right, having explained that in our analysis, it's better to go with the depreciation. And as I was saying, the financial statements do present that number, right? So remember, it was note 10J and 10G, right? So here in note 10, right, there is a note where they present you the depreciation, right? The total depreciation number, right? So you're going to have the cost, part of the depreciation that goes to the cost of goods sold, sale expenses, administrative expenses, right? These notes are becoming more and more popular as part of the typical estimation that we're going to be having, right? But immediately, what you should tell me is, okay, that's a good way to come up, but that number doesn't look like the number you have in here. You have 185,899. And given the other numbers that we saw below, right, the ones that were going to the SG&A, cost of goods sold, and selling expenses, cost of goods sold, and administrative expenses, these numbers do appear low, right? And the thing that I wanted to highlight is that, okay, these are the depreciation for a part of the PP&E. There's another portion of depreciation that is related to this other line called derechos de uso, right? Related to the NIF 16, right? And here they also have the other part of the depreciation that we were missing, right? So this number that I have here on top, 130,213, plus the number that I have here, 55,748, it's gonna give me the total depreciation of the year. But wait. Where are you getting this? Where are we getting this NIF 16, right? And hopefully you have learned this in your accounting classes, right? Because there has been a change, right, in the way leases have been considered in the financial statement, right? So all these leases that you may have, all this rent that you may have related to offices or buildings, right? Long-term contracts in particular, or leasing loans, right? That usually with banks, right? The NIF 16 forces you to recognize them as PP&E and at the same time recognize an obligation on the liability side, right? And this is what is presented here. But by the way, this is also already on this structure that we have up the first chart that we look at, right? Let me show you where it is. It appears here in this line, right? Activos por derecho de uso. Assets that you're going to be using, right, in an agreement. So they have been capitalized or they have as part of the asset, right? Here, and at the same time, they have, sorry, I'm scrolling it too fast. At the same time, let's put this, unfortunately, this is put as an image, so I cannot highlight them, but we have here as the same time accumulated depreciation, the number of 24 and the number of 23 as part of that estimation. By the way, no, it's something that is not an if adjustment, right? It's the way you should be recognizing all the leases, all the long-term contracts that you have going forward. This is now and forever. It's the new. You should be recognizing fixed asset all the rent. So let's imagine that you go into a long-term contract, right, for an office building, and you're going to pay 1 million every year for the next 10 years, right? What you should do is that you have an obligation for that payment in the next 10 years, right? And you should bring that value that you are going to be paying, those 1 million for the next 10 years, to the present, right? And come up with a number that is going to be the present value of that rent that you're going to be having, right? Similarly, when you go into a lease loan, right? An operating lease, right? An operating lease has transformed or has been converted to a registration similar to a financial lease, right? Remember, operational leases or operating leases, right, were not present in the balance sheet. They were normally only present in the income statement, right? And you put them as rent. That was one of the benefits of the operating leases. What logically happened, right, is that shareholders considered that was a way to bypass the regulations and rules and did not present an accurate presentation of the financial statements, right? You had a contract, you had basically a loan to acquire an asset, and you do not present that as a debt in your financial statement. And the way they correct that is this NIF 16, right? This standard is part of the IFRS standard, right? And it's part of the IASB for the United States standard that you should consider those long-term contracts, long-term leases, right, as assets and as liabilities. It should be part of your debt. And logically, you are right now imagine that if you put that as part of your debt, your typical ratios are going to increase significantly, right? Sorry, having some internet troubles. Let me check it out. Can you hear me? Okay, you can hear me. Hey, thank you. Okay, so coming back here, right? What I was trying to explain is that, okay, there's this is a change, right? In the way we have been registering your balance sheet, your leases, and your operating leases as a whole. Let me switch to Spanish to make this clear, right? Este es un cambio en la forma que la contabilidad se ha estado desarrollando o se ha estado registrando, ¿sí? Implica un cambio importante, en realidad, porque lo que va a pasar en sus estados financieros, en sus estados financieros es que, un segundo, por favor, es que en su activo va a haber un aumento, ¿sí?, de registro de inmuebles, maquinaria y equipo, que es básicamente esos esquemas de leases que estamos hablando, de operating leases, y a la par va a haber un incremento en sus obligaciones financieras de corto y largo plazo. Y el problema, evidentemente, con eso es que infla, evidentemente, el balance general, pero incrementa mucho más o hace mucho más evidente la deuda que tienen, porque este es el contrato de lease, de operating leases, no lo van a poder romper. Tienen ustedes, en verdad, una deuda mucho más alta que la que normalmente se observaba en los balances generales. Esta norma, el NIF 16, lleva como 3 años siendo recién este año se está siendo implementada en forma obligatoria. Algunas empresas, evidentemente, han podido adecuarse o han querido adecuarse, sobre todo las multinacionales, ¿no?, que tienen que presentar esto no solo en Perú, sino también fuera, poco a poco, ¿no?, a la norma. Pero se estuvo siendo pospuesta precisamente porque el problema era que ibas a tener un spike, un aumento significativo del apalancamiento de algunas empresas. Ahora que hagas la estimación. Coming back here, right, once again, what I was trying to show, right, is that depreciation line that we were talking about, here, the depreciation line that we were talking about, the 45, right, you're going to have the accumulated depreciation, and increasing depreciation come from two rows, right? This row that is related to the NIF 16, and this row that is related to CapEx addition, right? And typically the way they try to point or explain this NIF 16, right, is that, and the way they separate it, right, in order to specify, okay, these are my regular CapEx that I have been audited in all prior years, right? And these are the new issues that I should consider, right, as part of the estimation. Once again, these are the CapEx, right? These are not the stock of those leases, right? Sorry, these are the CapEx. Here is the one I'm looking for. These are not the stock of those leases. These are considered here in this line. This is the depreciation of those assets in particular that we are talking about, right? Depreciation related to these NIF 16 numbers. Okay, so coming back here, right, once again, as we were discussing, we're going to start with a top-down, notch back down. We're going to start with what it is the estimation from a top-down perspective. And once again, what I said is that we shouldn't be using this ratio. I'm going to scroll it down. Right? Copy here, format very quickly. When we're not going to be using this ratio as an estimation of depreciation, right? Let me just here, because this is what happened from the problem with that is that your depreciation is gonna swing a lot, right, depending on how your revenues are performing. That's not correct, right? Your depreciation is more fixed when you have it. This should be the number. That's what I wanted to do. But from a top-down perspective, right, the best way to try to estimate it, right, is using from a PP&E gross perspective, right? And in that sense, sorry, over there, I'm going to be using the 8.2, and once again, it's an assumption that I'm making that that's going to hold over time. And that's the problem with top-down, you're making an assumption over the total assets, right, that you have. And you're going to come up with some number like this, right? This is a typical one. You probably have seen this before, your estimation. And then you realize, well, it has consistently, right? It has consistently, if we go with this analysis, comparing using revenue and using PP&E, using depreciation using revenue has consistently underestimated what it will be the depreciation for this company in the forecast estimation that we have, right? And why is that? Because the way I have put it is that the growth that we have here is significantly moderate compared to prior years, right? And that's what basically occurring in this estimation. But that's not the one, the estimation, the way to estimate that I wanted to highlight and I wanted to explain today, right? What I wanted to present today was, okay, let's try to do it from a bottom-up perspective. And the first thing that we should consider are the different type of assets that we have in a PP&E, right? We have land, we have building, we have machinery, equipment. I have put here the separation between rent, right, as it appears on the financial statement that we are analyzing, right? Right here, machinery, equipment on rent, right? Those are the operating leases, by the way, right? And you have, let me get back. Transport units, furniture, and work in progress, right? And I have transposed this, right, in order to have an estimation on years to the right. So I have consumed information from 2018 and 2019, right, to come up with what will be an average PP&E number, right, as a whole. Why do I want to do that? What I want to come up with is, okay, what will be the percentage of depreciation, right, in order to calculate what will be the useful lives that are being used to depreciate these assets, right, on average. And this depreciation rate is the one that is being currently applied to our PP&E as a whole. Why am I doing the average? Well, I'm using the average because there are changes on the PP&E, right? And it's better off to come up with the average number. Remember, depreciation is a flow, the PP&E is a stock, right? And I don't want to have it affected with issues that occur at the last part of the year, right? In order to have this number not considering correctly what has been depreciated. So I have used an average. I have calculated depreciation based on the information that we had. And with that, we have come up with the depreciation rate, right? And if you do the inverse of the depreciation rate, obviously you're going to come up with the useful life that is being considered for the asset, right? Logically, let me just use this for visual purposes. Logically, land is not depreciated. Obviously, it doesn't have any number in the useful life. And work in progress is not going to be depreciated. Right? Work in progress usually shift into building and construction and is part of the CapEx number that you are going to be considering. Right? So work in progress is basically some construction that has not been finished, some machinery equipment has not been terminated, or have not been fully developed, right? And what basically you do is you add the CapEx number to the work in progress, and then you transfer it to one of these six, well, actually only the four ones, right, that we have over here are the ones that are going to be impacted by work in progress. Right? So, given the useful life that I have, what I have done is I have contrasted this or compared this, right, to the numbers or values that we have for useful life in the financial statement, right? So in your financial statement here in this report, right, there's a section where they present to you what's going to be the useful life, right, of this asset. So there's a section regarding policies, how you're going to treat all the different accounts in the balance sheet and the income statement. And regarding PP&E or fixed assets, you want to talk about them, right? There is an explanation of what is the useful life that you have for the assets in particular, right? And here I have copied that information, right? And it's okay for buildings and other construction in range between 5 to 80, right? With civil works, right, being between 30 and 80 years, right? Uh, Finishes 15 to 20, and installations 5 to 10, right? So, logically, with the complete information and details on each one of the items included in these rows, we can pinpoint that. We do not have that information. But logically, what I'm trying to figure out is if it's reasonable, the number that I'm using, right? This depreciation rate here, this depreciation rate makes sense or not make sense at all, right, in our estimation. And we have is that it's 11 years, and it is between the numbers that are present here for buildings and other construction, right? For machine and equipment, it should be between 1 and 15 years. We are using a depreciation rate that is consistent with 7 years. That makes sense. Machine and equipment for rent, similarly. By the way, it mentioned that you should be using what are the hours of the machinery being used, right? Logically, it will arrive to a number that is similar than before because it's going to be a similar assets, right? Machine and equipment in general. Transport units are only 5 years depreciated, right? We using on average a useful life of 3.6. And furniture is between 3 and 10 years with a useful life of 7.7, which is reasonable. That makes a lot more sense. So that's our typical estimation that we are going to be seeing right over here, right? What we are going to be doing now, right, is that we are going to apply this depreciation rate. And the first thing we need to realize is that we need to consider what are the assets that we already have in place and the assets that are coming from CAPEX, right? I have opted to separate them in two different tabs, right? You can actually add them up as a whole, but I think the explanation that we are presenting here makes a lot more sense separating them in this way. Okay, so I'm going to start with the historical numbers that we have for the assets. Right? Let me scroll back up. And let's start with what we have in PP&E gross, right? As historical number for 2019 and 2018. Right? Once again, these numbers are coming here. Let me scroll that down. Typo. Page 45. We rotate that to the right. I'm using the numbers that appear here as part of what is the outstanding that is on the balance sheet related to the PP&E gross, right? For 2019, and this, or the one that is in the January 1st, is the end of 2018, right? Obviously. And it appears same here below in the next table that we have for property, plant, and equipment. Okay, let me switch back here, right? So what we are going to be doing first, right, is that if we are talking about the actual numbers, the forecasts are going to remain the same, right? As long as we not assume that we are selling a particular PP&E gross, I can make that assumption, right? Let's put it highlighted here. Assumption, not sale or retirement, right? Of the asset. If that's not happening, we're going to have the same gross from the historical numbers that we have in 2019. And what I'm going to do is I'm going to apply the depreciation rate to each one of them. Right? Everybody follow me so far? Sorry, I have not said that in a while. Any doubt on what I'm doing? Okay, it does appear straightforward, at least for the first part, right? We are going to be calculating based on the depreciation rate, what's going to be the depreciation for this asset. Logically, the first thing you will imagine, okay, is that the numbers are going to be quite similar, right? The numbers should be quite similar because you are applying to the same fixed assets, the same values, the same rates, depreciation rate that we calculated here before, right? in general as part of our estimation, right? But not, you realize there are some changes, right? For 2020, I have 200,000. 2021, I have 187, and so on, right? And the reason we have this change, right, is that obviously there is an effect coming from the fact that we are gonna fully depreciate those fixed assets that we had at the end of 2019, right? So if I only have these fixed assets, there's gonna be a point where I fully depreciate them, right? There's not gonna be any more of these fixed assets in to depreciate, right, when we calculate this. Why am I doing that? Or how am I doing that, right? Embedded in the formula that I presented over here, right, there's a calculation of what happens, right, if I opted to depreciate normally these PPN. So let's imagine for a second, let me just correct this formula. I'm going to copy it back, right? So the typical calculation that you will have will be this, right? The typical would be, let me just erase step numbers for a second, not to mess it up, right? Typical calculation will be, and let me highlight that, but we are going to be doing the average of the PP&E gross, as we said before, multiplied by the depreciation rate in order to come up to the PP&E, to the depreciation number, right? If I had this number 51,980, that this is in thousand ways, so it's 51 million multiplied by the depreciation rate of 27. It should give me 14,298,000 number, right? But what I have here, it's a chart that highlight what is the accumulated depreciation, right? And it's dragging and it's obviously adding the new depreciation that we are calculating to the historical accumulated depreciation, right? And the historical accumulated depreciation obviously is coming from this chart. The details, here's the accumulated depreciation that we have, sorry, for all the different numbers, right? For all the different types of fixed assets, per se. Okay, but if I have the gross PP&E, I have the accumulated depreciation, I can calculate the PP&E net. That's the problem, right? If I simply use, and this is something, so a minute, it's refreshing, I don't know why, apparently the connection. Okay, sorry about that. It threw me out completely, don't know why. Some troubles with internet, that's true, but I thought I fixed it. Okay, so coming back to my Excel spreadsheet, right? And this is something that I have seen in Investigación Financiera, right, and a couple of other evaluations. For most of the time, right, people just go ahead and calculate the PP&E gross, right, or calculate directly the depreciation number, but never realize what's happening with the PP&E net, right, as part of the estimation. And, and logically, when you go to the gross number, better said, to the total number, not to the gross number, to the total number, the number that's going to appear on the balance sheet, right? The number does appear fine. It's positive, right? So when you're doing your forecasting, you do not realize that there is a negative number in the middle, right? In one of the rows, in one of the different type of fixed assets. Why? Because the total number is positive. Right? So you just don't care, right? And that's a problem. That's a problem because what you have done is you have depreciated too much, right? Far more than you should, higher than the PP&E gross, this row, this particular type of fixed asset, which is transport units, right? So that's why what I like to do, and I actually do it in different ways. In this case, I have presented a formula that is very simple. Sometimes I prefer to use intermediate tables to figure it out. But if you can realize what this formula does is calculate if the PP&E, right, gross, right, is gonna be, so the PP&E gross, which is the F12, is gonna be greater than the accumulated depreciation, right? So if the PP&E gross is greater than the accumulated depreciation, considering the depreciation that I'm calculating this cell, right? In that case, calculate the formula as we just did. Average of gross PP&E times the depreciation rate. And if that is not the case, right? If after calculating the accumulated the depreciation for this year using the depreciation rate, which is this number F24, times the average gross PP&E, if after considering that depreciation and add it to the accumulated depreciation, I am on top of the gross PP&E. If I'm going to exceed that, then let's depreciate all what is remaining on the gross PP&E number, this particular, right, which is the F12 minus E48, right? So we are going to be depreciating what is left, right, in this calculation. That's why, just take that out, already corrected. Here, transport unit PP&E net goes to 0, right? What is happening is that in my assumption, right, that there are not going to be any more fixed asset of transport. Yes, there are going to be some from the PP&E gross, right? You have already depreciated all the historical value that you have for transport units, right, in the year 2021. Remember here, the depreciation rate was very high, 27.5, but and in just 2 years, I completed the depreciation, right, of this transport unit that we already had in place. Similar thing happened for machine and equipment. Similar thing happened for furniture, right? And logical, you can say, hey, but you said that the useful life was 3 years and 7 years respectively, right? For transport units and for machine and equipment, right? And you are depreciating them very fast. What I would argue is that no, what happens is that I already had some accumulated depreciation related to this type of fixed asset. And that's why we complete the depreciation of the fixed assets historical that we have at the end of 2019 in just a few years, right? For transport units, it's 2021. For machine equipment and furniture, 2022. Realize that even rent is finalized here, even building it disappears here in 2028, right? That's 8 years, if I recall correctly, for fully depreciating historical, right? So that's the way we should be calculating the depreciation on this side, right? I was saying I was going to make a break, but let's continue and let's do the discussion related to when we're going to recover class at the end. Yeah? Unless somebody wants to take a break or anything. Okay, let's continue. As I was saying, these are going to give you the depreciation for the historical PP&E that we have in 2019. What we are going to do now, right, is that we're going to calculate what is the depreciation for the CapEx portion, right? And once again, there are different ways to come up with the CapEx portion, right? If you are working with the company, if you are financial advisor company, share on the investment banking side, or even if you are the relationship manager in the bank, right? Trying to help the company get some financing, right? Trying to structure them correctly, you can actually discuss with them what's going to be their capex needs in the coming years, right? That's going to be a lot easier, right? But if you do not have that, if you are on the sales side, versus on the buy side, right? If you're on the buy side, if you are analyzing the company without no inside information regarding this, a good way to try to estimate may be related to the revenue portion, right? And the main idea on that would be, okay, the higher the revenue I'm going to have, right, the higher the capex is for the revenue to sustain the revenue in the future. Right? So what I have done in this app, right, instead of just using the top-down approach, by the way, which we actually use capex over revenue, but you do realize that when we are doing here, we are doing at an aggregate level, right? All the capex, all the PP&E that you have, right, consider as part of this estimation. If that is not the case, and we focus on the different capex line that we're going to be having, right, we can estimate the capex, right, as a percentage of revenue for each one of the different PP&Es that we're going to have. Yes, there's going to be some capex expenditure, even less, right? Even in the sense that you're just going to remove the land, right? Or expand it a little when you acquire a particular building or so, right? There's going to be some expenditure in that related to the revenue as a whole. And once again, this is also coming from here, right? And we're doing is I'm using this line, right, which is the additions line that appears over here, right, as part of the estimation that we're going to be on capex, right, as part of the calculation that we are going to be considering as a whole. So that's going to be the 186, 132 line that I have over here as part of the total estimation number that we already have in place, right? Okay, so having said that, right, we are going to come up with capex over revenues and estimation. I'm going to use an average, right? Let me just scroll that down a little bit. An average of the calculations that we have, right, for each one of the different PP&Es that we have placed, right, in our calculation. If this is the case, right, if this is the estimation that we are having, right, we are capable of coming up with a forecasted capex based on the revenue line that we have here. Okay, I'm back. It's becoming annoying on screen. Okay, so once again, I'm trying to estimate the capex based on the revenue line that we have, right? And we are capable of coming out with a forecasted capex. As I was saying, we are using just the ratio of capex over revenue for each one of the different fixed assets that we have in place, right? With that in mind, right, we are capable of estimating what's going to be the capex forecast for each one of these different lines and come up with a total capex number, right? By the way, realize that by doing so, right, what we are gonna be arriving is the number that it's different, right, and the one that we had before, right? Because on an aggregate level, right, these are different values, right, that we are going to be considering the average in calculating each one of them as a percentage of revenues, right? That are going to be giving a different number than top-down perspective. Right? If if we focus on that and we realize how it's happening in the top-down approach, right? We have overestimated the capex, right? But close to 5% in each one of the different years, right? Which was going to be a significant number in our calculation. Okay. Having said that, right? We already have the capex forecasted, and we can come up with a PP&E gross for the capex, right? Obviously, for the capex, we are not going to have historical data, it's new data, and we are going to be calculating each one of these different type of PP&E as PP&E gross, adding what we have on top as part of the capex in each one of the different years, right? Once again, we are on the gross side, we still haven't incorporated depreciation, which we're going to do even farther, right? So several ways we touch base on this, right? You can decide to depreciate each one of these capex, right, independently, right, for each one of the years, and depreciate this on a straight line, this on a straight line, and so on, right, and create a massive Excel spreadsheet with different depreciation. An alternative approach, which is the one that I have opted to and actually works reasonably in a sound way without having to go to the micro level to depreciate each one of these different capex, right, is to apply a similar procedure as we did before, right? I'm going to apply the same depreciation rate that we had calculated before, right, to our estimation of PP&E gross capex, right? And these are the depreciation rates that are on average applied to a different elements or different type of fixed asset that we had before, right? Realize that I'm using the numbers that are coming from our calculation of historical data, right? From the average of historical data. It can also be argued that you should try to use the marginal depreciation rate. Right? Calculate how many years, or make an assumption about how many years the capex should be depreciated, right? Remember, it was supposed to be, for example, buildings between 5 and 80, and you can assume 15, right? You can make an assumption of machine and equipment of 10, and so on, and make that assumption over here to come up with new depreciation rate. I found it more useful to use the historical data that we already have, right, as a proxy of what should be the depreciation rate for the right? But it's not uncommon to have here marginal depreciation rates related to the useful life that are assumed to be applied to the new capex that the company has in the coming years in your forecast. Okay. Using the same depreciation rate that we just calculated, right? What I have figured out, what we have come up with here, right? It's the estimation of depreciation capex for each one of the coming years, right? And logically, what we are going to observe, right, is that there is an increase in the capex that we had already put in place. Sorry, in the depreciation that we already have in place. So give me 1 second. I was doubting here. Oh, yeah, that's what it is. It's not the average is not being affected. It's correct. For a minute I doubted that it was linked correctly the way I copied it yesterday. Okay, so coming back here, right, we are going to be calculating depreciation once again, and as part of the typical estimation, I'm still using the same formula, right? I'm still evaluating if PP&E net after this depreciation calculation, it's gonna be overestimating or going above the PP&E gross that we have, right? Remember, there are some assets, some fixed assets that have a high depreciation rate, and that may occur in this situation. The depreciation rate that it happens, right, it's increasing over time, right, as part of the rise on the PP&E, the capex numbers, right? The capex number was increasing because we had a rise in revenues, right? And obviously that's what is going to be impacting here. And what we're going to observe here is that we accumulated depreciation for the capex, and we have the PP&E net, right, as a whole in general. What happens here in my assumption, right, given the high percentage of high depreciation rate that we have for transports and units, is that the depreciation of all the capex for transports and units fully depreciates all the historical capex in year 2027, and all the additional capex that occur, let me just put it here in this row, making more evident what I'm trying to say. All this additional depreciation, so additional capex that occur, is immediately depreciated as part of that addition, right? So you add this, and it continues to be depreciated given the accumulated depreciation that we have in this estimation as a whole, right? And that's why the PP&E net goes to zero as part of our typical estimation that we're going to be having here. So with the two elements, right? With the two elements that we have here, the depreciation that is coming from the historical numbers, right? From the data that we have in 2019, plus the depreciation that is coming from capex, right? Based on a growth that you have in revenue, right? What we are going to be capable of estimating is how much is the total depreciation line that we need for our financial statements and the PP&E that we are going to be having in the balance sheet as a whole. Okay. Let me stop over here and ask if there's any question on this estimation that we just did. So is there no question? Let's stop a minute and switch to the other topic that we have on hand, right? Which is the administrative portion, right? So, como le mencioné a algunos de sus compañeros, lamentablemente la semana pasada tuve que ir a la clínica y supuse que iba a estar de vuelta antes de las 7:30, tuve que ir tan temprano, los doctores pidieron que me quedara. Y en verdad es un poco difícil escribir en celular para tratar de mandar el broadcast message que terminé mandando 7:15, creo, 7:20 en realidad, para avisarles un poco tardíamente también. Pero bueno, quiero recuperar esas horas de clase, y lo primero que quiero consultarles es si tienen disponibilidad en algunas mañanas o noches, o si prefieren fin de semana. So, vamos a poner la opción de sondeo para ver qué disponibilidades tienen, ¿no? El salón de clase más fácil, andando a mano. Oh. Hay alguien que quiere fin de semana sí o sí, a cualquier hora. Voy a poner horarios. No, tengo fin de semana, tenemos todo un día todo. Déjenme una opción. Miércoles tampoco puedo. Ay. Un segundo, por favor, déjenme copiar las opciones. Es muy difícil copiarlas. ¿No deja más? Ay, caramba. Deja 5 opciones. Estoy soltándolo. Y nuevamente, como les dije, y algunos saben, porque tuve que recuperar clase con algunos de ustedes el semestre pasado. Y tenemos que hacer más de una sesión y se repite lo mismo, no hay problema por mi lado. Faltan 12 personas. Ah, qué variado. Hay 3 que no han respondido. Sí, Milagros. ¿Tenías un comentario, Milagros? Déjame mostrar la respuesta. Okay, la mayoría está de acuerdo en hacerlo el jueves en la noche y otro grupo puede hacerlo el fin de semana. ¿Sí? No se sabe. Nuevamente, como he dicho, van a ser varias sesiones idénticas. ¿Sí? Voy a repetir lo mismo en las dos sesiones. Evidentemente hay un grupo grande que sí está de acuerdo en hacerlo el jueves en la noche. Lo único que quiero ver es que no haya... Marquemos el jueves 5. Que no haya... El jueves 12, ¿ya? Recuperar 2 sesiones de arranque. ¿Ya? Y los que son fin de semana, solo para los que han dicho fin de semana, o también quiere cambiar de lo del miércoles y jueves en la mañana, que solo hay 5 personas. Los del miércoles y jueves en la mañana podían el sábado o el domingo. Algunos que son uno. Gonzalo Romero, ¿podría ser jueves? Yo soy amigo por la facilidad de que presumo que el sábado hacen actividades para poder salir, o sea, las actividades normales que hay que se debe poder tratar de ejecutar en un día que se puede salir, ¿no? O el domingo no nos dejan salir todavía, vamos salvo a caminar cerca, es más complicado. A ver, ya, déjame apuntar esto acá, ya estoy apuntando el jueves, ya, 7:30, y déjame hacer otro sondeo rápido, muchachos. Voy a borrar, cancelar el sondeo anterior y hacer un sondeo rápido de opción múltiple, función Sí va el jueves en las 7:30 de la noche, ya eso ya quedó cerrado. Aquellos que puedan sumarse, pueden sumar. Y lo que estoy haciendo es otra consulta el fin de semana, si qué día y qué hora prefiere la mayoría que no puede, no se siente cómodo yendo el jueves a las 7:30 de la tarde, 7:30 de la noche, perdón. Entonces, este es otro sondeo para aquellos que quieren responder, lo que respondieron que era el fin de semana o que no podían el jueves, prefieren un sábado, prefieren un domingo. Y no voy a hacerlo a las 7:30 de la mañana el domingo, evidentemente. Va a ser el domingo a las 11, domingo a las 10, no lo podemos manejar. Si prefiero sábado a la tarde, también lo podemos hacer sábado a la tarde. Pues son todos los que tengo un TAI entre sábado y domingo en la mañana. Los que están sábado tarde no pueden de ninguna manera domingo, y los que están domingo no prefieren ninguna manera. No podemos editar 3 sesiones. Hagamos lo siguiente. Ya, acá hay, dado que hay, dado que hay ok, Nicole. ¿Y qué prefieres? ¿Domingo en la mañana, sábado? Ok, tú vas a hacerlo. Sábado, domingo. Por lo menos la primera sesión, la primera recuperación, hagámoslo los dos días, ¿ah? Para no perjudicar a nadie. Vamos un asado en la tarde y voy a hacer también pongamos, ¿qué hora pongo? 4 p.m. y domingo 11 a.m. ¿bien? ¿Sí? Pues vamos a poner esto. A ver, vamos a poner acá en el chat las fechas que estamos quedando y cómo arrancamos por lo menos en la primera sesión va a ser, el sábado y domingo va a ser así. ¿Sí? Vamos a quedar así, ¿no? Vamos a apuntarlo bien. Misma clase, ¿ya? Y el tópico es con free cash flows and financial statements. Va a ser 3 sesiones de recuperación. Me disculpo que nos hayamos atrasado. El sábado. Vamos a preparar mejor el jueves 5, el 11 a las 7:30 p.m. ¿Ya? El siguiente es el sábado 5, ese es 5, ¿no? No me estoy equivocando. Sábado 7, el 11 a las 4 p.m. Igual son 2 horas. El domingo 8 del 11 a las 11. Ya. Esta es la primera clase de recuperación, ¿ya? La segunda clase de recuperación cerrarlo una vez. Entrar con financial statements. Vamos a acabar financial statements si es que no hemos acabado, supongo que sí. And discount rate. Y esta va a seguir el jueves. Estamos quedando ya, ¿no? 12 del 11. Alguien me dice si tiene algo. Vamos a hacer 30 pm. ¿Ya? Y ahí es donde tengo un tema. Ah, pero es el sábado 14. Ok. ¿Queremos así? Estamos quedando así. ¿Ya? Voy a copiar esto. Lo voy a también mandar por el announcements, que esas son las 2 sesiones de recuperación que vamos a tener. ¿Tienen alguna objeción o alguna sugerencia adicional? Voy a hacer eso y tengo que mandar los lineamientos. Give me 1 minute, guys. Un problema acá con... Ok, let me switch now. Déjame cambiar al otro topic. Justo vamos a seguir con el análisis de Ferry Core, pero quería entrar al nuevo tema. Todavía quedan unos minutos para poder... Perdón, alguien hizo un comentario. Ah, sí. Ok, sí, sorry, perdón, milagro. También he recibido la consulta si la clase debía hacerse en español o debíamos continuar en inglés. ¿Sí? Que hagamos esa consulta de una vez, sondeo, múltiple. En español o en inglés. Hagamos la primera. Y esto es casi como el plebiscito en Chile. No, todas las clases. El pedido es todas las clases. Todas las clases. El pedido es que la consulta que he recibido de algunos alumnos es si es factible que las clases cambien a ser dictadas en español, en aras de comunicar mejor y explicar mejor lo que estamos haciendo en Excel. Es siempre difícil explicar Excel y es más aún difícil hacerlo a distancia, ¿sí? Porque si se dan cuenta lo que estoy haciendo es yendo sobre el Excel que ya está desarrollado, o tratando de desarrollar alguna etapa juntos, pero no veo que ustedes están haciendo lo mismo o están dando a replicarlo, tal vez no le estoy dando el tiempo suficiente y esa parte de medir es complicada. Lo que están sugiriendo es, oye, de pronto cambiarlo a español resulta siendo algo razonable o algo que mejora la clase. Dando a adecuarme a lo que decida la clase, me es indiferente dictarlo en español o en inglés. Evidentemente inglés no es mi lengua materna, pero trato de hacer el mayor esfuerzo posible. Y tengo la suerte de haber tenido la oportunidad de trabajar fuera, de trabajar con modelos financieros, estados financieros y demás. Y es por eso que algunos términos me los conozco, entiendo más en inglés en general. Entonces, se cambie, o no se cambie. Entonces vamos a hacer la consulta e inicio el sondeo. Hay 9 personas que no responden. Hay un comentario adicional que no lo he leído. Ese es mi amigo. ¿Entendiendo? Creo que son los mismos tres que hemos perdido en algún momento. Esa es la respuesta que tenemos. Tal, un poquito menos que en Chile. 64% prefiere que sigamos en inglés las explicaciones. Nuevamente, yo ya no quedarme después que termine la clase y explicar en español si alguien tuvo alguna duda. Y honestamente, levánteme la mano si es que no estoy siendo claro en inglés para ustedes. El inglés no es mi lengua materna, evidentemente, y el problema evidente de comunicación puede surgir, más aún estando en este esquema de trabajo virtual. No es fácil comunicarnos, por lo menos hay desafíos al comunicarnos, debemos y creo que podemos superar. Entonces, seguimos con las explicaciones en inglés y vamos a pasar brevemente a analizar la parte del estado financiero que nos ha entregado desde un punto de vista de free cash flow, ¿sí? Déjenme un momento compartir. Ok. ¿Se está compartiendo? Sí. He puesto acá las típicas fórmulas que probablemente ustedes han visto related to calculating the free cash flows. And there's other one that probably you have seen related to capital cash flows, right? We're going to explain both of them as we go along, right? And when are we going to be using this estimation? The most popular one is the free cash flow calculation, right? And let me just, I'm going to put it here and we're going to calculate that for our friends on record, right? For 2019, right? 2018, 2019 as part of our estimation, and then we're going to go from there. Right? What it says, what this formula says, right, as you know, is that we need to start with the operating profit or earnings before interest and taxes. Right? We should apply the tax rate, right, to come up with the earnings before interest and taxes. And consider some elements, right, that are going to be affecting the cash flow, right? This is coming too small. Give me 1 second, guys. Okay. We should take into account the capex, right? We should take into account the depreciation. We should consider the change in net working capital. And we should take into account other elements. I'm gonna touch base on each one of these in a bit, right? Before jumping into our analysis, right? So obviously the EBIT is EBIT 1 minus T is positive. CapEx, sorry, let me just be clear. CapEx is a negative, right? Depreciation is positive. Change in net working capital is a negative, and other depreciating items is gonna be, I'm gonna assume it's positive or negative, obviously depending on the effect, right? We're going to touch base on this in a right. What I want you to do right now is go to our financial statement, right, and try to calculate, right, come up with our free cash flow line. That's the key element we're going to come up with. We're going to try to figure it out. If we go to our jumping into my financial statement that you already have there, and we rotate that to the left and scroll back up to my statement of cash flow. And I wanted to highlight this because we are finding this as a critical error in some estimations. Okay. Oh, give me one second. So one of the ways a lot of people try to estimate this when using the statement of cash flows is going to the operating activities, this number over here, cash flow from operating activities, and adding all the investment activities, right? And they try to use as a proxy of the free cash flow line that you are calculating, right? That's the way normally they try to estimate this type of operating, this type of cash flows, as I'm trying to say. So in order to come up with this will be a number of 245,000, right, of free cash flow. Let me put the numbers up here so we could check it out, right? 500, 688, and second, we have it right over here too. So these are the cash flow from operations. And these are the cash flow from investment. And the cash flow from investment is 255054. It's just negative, by the way. So the estimation of the free cash flow using the financial statement or statement of cash flows, right, will give you a number of 245,634 in year 2020, right? This is the free cash flow estimation from the statement of cash flows. Okay, let's keep it there and let's figure out if we are going to be capable of arriving to a number similar to that, right, in our calculations in general. So what I wanted to highlight when we jump into the financial statements, right, section, it actually didn't work out the way I expected. Let me go a second. This is why. Sorry. 1 minute, guys. Here it is. That's what I wanted. So let me just quickly show you. It's showing the screen? Yes. So one of the things that normally happen when we go to this statement of cash flows, right, and you can realize it here, is that they have presented this in a direct method, right? And you're going to see that they have payments to suppliers, payments to workers, right, payments to the, SUNAT in the IRS, the authority, and that's going to give you the operating activities, right? What usually happens is if you focus on the direct method, indirect method, right? There's a line over here that relates to interest payment. And that's where a problem arises when you try to use the statement of cash flows to come out with the free cash flow. Because remember, when we are going to be calculating the free cash flows, we are calculating the free cash flow for the firm. Right? These free cash flow from the firm are going to be used, or should be used, right? If we go from the what are going to be used to repay, they're going to be used to repay the debt holders, our lenders, and the shareholders, right? So we shouldn't be including in the free cash flow calculation things like interest payments or dividend payments, right? Because those are specific cash flows related to the debt holders or the shareholders in this case. What I wanted to highlight is that in some financial statements, accountants do present in this section, in the section of operating activities, the interest expense or the payments of interest expense, better said, the cash outflows for interest expense that have occurred in the company in that particular year. And I wanted to present, this is MEF, the second guys, here it is. When I scroll down, I just realized that I have a financial statement that didn't present that. Look at this. This is the financial statement from Inversiones Centenario, right? As you can realize, it has the direct method, right? And this line over here is the one that I'm saying it's affecting the calculation of free cash flow just by simply adding the cash flow from operating activities plus the cash flow from investment activities, right? This line that appears here, pago por intereses, right? It is presented by accountants over there because it is believed that you do need to pay those interests to continue operating normally, right? They only consider in the financing activities usually all the additional debt that you are getting, all the debt repayments, right, for the lender side, and for the shareholder side, all the additional capital being raised or all the capital returned to the shareholders, plus the dividends that go to the shareholders, right? That's what does appear here. So this presentation that I'm showing, this is an audited financial statement performed by EY, by the way. And you're going to see this in many financial statements, right? They do present interest payments in the cash flow from operating activities. And in that case, right, you shouldn't do what we just did here. It's just adding cash flow from operation and cash flow from investment. Why are we capable of doing so? Because in the particular case of Ferreycorp, right, friends at Ferreycorp, they didn't make that mistake, right? When they audited Ferreycorp, what they did is they didn't include the interest payments in the activities or operating activities cash flow, but they include it in the financing activities cash flow. It appears here, intereses pagados, right? So by adding this statement of cash flow information for Ferreycorp, we are not making a mistake. If you want to use, once again, if you use statement of cash flow to come up to your free cash flow line, please be certain that this line is not being considered, right? I'm finding out those errors in the valuations that are presented in Investigación Financiera 3 out of 4. So that was 75% of the times of the ones that we have checked. Okay, so let's switch back to our typical formula, right? The EBIT formula. Just bear me 5 minutes, guys, and no, I'm taking a little bit of the recess. I wanted just to focus on the first section, right, which is going to be the EBIT1 minus line. So the EBIT line, right, that we are going to be picking up, obviously, it's going to be in the income statement. We are going to be using this line, utilidad operativa. Right? That's the proxy to our earnings before interest and taxes. Right? Obviously, you're going to say, hey, there are some things here like difference in cambio, right? That's going to be an adjustment for exchange rate, right? There's no problem about that. And sometimes you find here extraordinary expenses, right? Or extraordinary incomes, revenues, right? Below utilidad operativa. You do not want to consider them as part of your free cash flow forecasting, right? Those are extraordinary issues, and you should try to focus on the ones that are regular income, regular revenues, and regular expenses as part of the normal business of the company, the continuous business of the company. So we're going to pick this line, the 46736, right? And I'm going to fill this out better later. But the first thing that I just want to finalize, here is the tax rate, right? So there are two possibilities here, right? You can either use the effective tax rate that most people use, or the marginal tax rate. The marginal tax rate is 29.5%, right? Which is the rate that the normal company should be paying, the regular, usual company pays here in Peru, right? Unless you have some tax exemption, right? This is the rate you should be considering. By the way, there are some additional elements here, right, that we're going to discuss later on, like participación resultados netos, right, or distribuciones a los trabajadores, right, that we are going to incorporate those, right, as part of the expenses that we should be having on the EBIT line. Not, it shouldn't be part of your tax rate as a whole. So normally what we will consider here, right, I'm going to change this, is the tax number. We are talking about historic data, right? Let me switch back here. We are going to be picking up the tax number that does appear here, right, for payments, right, to sorry, I scrolled it back too far. And we're going to be paying in income tax rate, right? That's what we want to highlight over here. Sorry, one minute. It's getting confused somehow. Here it is. What I was looking for. I saw it before. 141,600. I saw it below, and I was like, where did I saw it at the end? That's the one that we're going to be using in order to come up with our EBIT line here, right? And we're going to explain that in a bit. Why are we not using the 29.5 directly for historical data, right? We are going to be taking that into consideration in a bit when we are going to be analyzing other items as a whole. So let me stop it right over here, right, before jumping into, and let me reconvene on next Tuesday with this information, and I'm going to fill it out and post it so everybody can quickly analyze and come up. If you, let me have this as an exercise for you. If you try to take a bite, right, and solve this, you can try to figure out what is the free cash flow line, right, that we should be considering for next Tuesday, and I'm going to upload that on Sunday so you can check it out during Monday before the class that we're going to be having, right? So let's have on that, and let's stop over here y continuamos la siguiente sesión el día martes y ya planteamos la recuperación para las siguientes semanas. Okay, so let me stop the record.